The first thing I'm going to say is, as an individual, when I ask you the question of how much money do you have, you should consider all your cash. Most people don't actually keep that much cash. Any money you have in the bank, any money that you have owed to you, and also any debts that you have.
Again, wrong. Look at the balance sheet of any business in the world. No business reports all of the debts owed to them as cash or money. You are so fucking wrong. Ding.
Ding.
That is your total situation with regards to money. It doesn't really make sense if you...
I'm sorry, I did not mean to use the F word. But like,
we're working on it.
Accounts payable, notes payable. I'm sorry, on the balance sheet side, when they're owed to you, they're receivable, right? So it's accounts receivable or an asset, notes receivable or an asset. These are all promises from vendors or other borrowers that they will pay you back in the future that you're booking on your balance sheet as an asset, but it is separate from cash and cash equivalents, which are things like Bitcoin and currency, basically. So the fact that he's saying that these are all commingled as money is just like, did you ever take accounting 101?
It's
the first thing you talk about in accounting. Like, here's the balance sheet. Here are the first two items.
Yeah.
Did you not make it that far in accounting, bro? What's going on?
I don't know where this guy came from, but it's a bunch of just confusing jargon. Malarkey.
Borrow £1 million and you have to pay that back in a year to say I'm a millionaire now. You have to include your debts. It makes sense, right? So as an individual, you should include everything. So then why is it that economists don't do that? In order to understand that, I think we need to rewind a bit and go back to the understanding of how money is created. Because this is another story around which there's some confusion. So for example, there are a lot of people who would say to you, when a bank lends you money, they don't actually give you that money, they just create the money out of thin air. And I think that's quite misleading. And I will explain why. The only people who are allowed to print cash and create money out of thin air are the central banks.
He's also wrong about this. Commercial banks can just loan you money, right? Literally against their own equity. So the shareholder equity that's inside of a bank, when they extend a loan to someone, they can just create new units of currency in that user's account.
Yes.
Now, if that user defaults on that loan, then that will decrement the equity of the shareholders in the bank.
Okay,
but they are creating it sort of out of thin air. Now, there is a claim against the equity in the bank, but the bank is often backstopped by the central bank. If enough banks go bust at once, well, they just go to the central bank who does print the money out of thin air and backstops their equity.
Yeah, okay.
That's what a bank bailout is, basically.
Right.
So in this country, the Bank of England. In the US, it's the Federal Reserve. In Europe, it's the European Central Bank, the ECB, okay? These guys literally can create money. Nobody else can.
And just to be clear, not even the central bank can. We always say money printing. It's a colloquial term because it's what people understand. They think currency equals money, and it's harder to disentangle without going through the whole exploration. But to be very specific, the central bank is not creating any money at all. The central bank holds real money, which is gold in reserve, and it creates currency. It's counterfeiting currency into circulation.
It's a gold derivative. Or is that
well,
not
it
right?
originally was a gold derivative when it could be exchanged for gold, right?
Okay, right.
It was a banknote that was redeemable for gold.
Yeah.
But then we go into fractional reserve banking where they issue more paper notes, banknotes, than they actually have gold reserves. And then eventually when that fraud gets exposed, as it did in the United States in 1971, you know, we had 6 times more US dollars in circulation globally than we had gold reserves as a nation.
Yes.
That's why Nixon suspended gold redeemability, because the fraud was exposed. We had a 6-to-1 leverage ratio, which means we're running a fractional reserve to the tune of 84%. Enough people asked for their gold back at once. Nixon said, no more. We're going to the 0% reserve.
Temporarily suspended.
Temporarily suspended 54 years ago. And that's what gets you on the 0% reserve fiat currency standard. So central banks aren't technically, and I use this term too, I use printing money because it's just, I don't know, the most accessible. But the very tight phrase I've used that's become popular about this in the past Inflation is legal counterfeiting. Counterfeiting is criminal inflation. They are the exact same activity. There's zero economic distinction between the two. There's only an immoral and unethical legal distinction. That one group of people are allowed to counterfeit currency and profit.
Counterfeiting cartel.
It's a currency counterfeiting cartel. Yes. And if you want a deeper dive on that, read the book, The Creature from Jekyll Island. But I will continue to use money printing throughout almost as by force of habit, which when I say money printing, I do mean currency counterfeiting under the paradigm of a central bank. So to be very specific, he's saying that, oh yeah, only central banks can create money, but I want to get specific about that distinction, that gold is money. It is that thing that is all asset, no associated liability, mere possession of it is the equity holding in it. Currency is the debt instrument that is a promise to receive money in the future. But we've gone on into this world where currency is no longer redeemable for real money. Therefore, it is the confidence game called fiat currency.
Oh my goodness, thank God for Bitcoin.
Thank God for Bitcoin.
We'll get later to why people think that commercial banks can. But central banks are not allowed to give money out. So then if they're the only guys who can create money.
Also not true. The Federal Reserve Act does prohibit that central banks directly issue currency into the economy. They're supposed to loan it to the U.S. government, and then the government gives it out via, legislative acts that, people vote for the people that go in and sign the bills or don't pass the bills, and that's how the money gets spent. However, in recent years, which by the way, the Fed's never been audited, first of all. So there's that. Never. It's been around since 1913. Second of all, I think this was in 2020, they were spinning up special purpose vehicles that the Fed was funding. Which is the same thing, right? Like you printed money and then you spun up a business and you funded it. Okay, they didn't inject the money into the economy directly, right? They didn't helicopter the money directly. They actually went through the U.S. Treasury channel for that. But they are funding businesses that interact with other businesses in the real economy with freshly printed money. So that also is untrue. Although it's kind of like a legal loophole. So he's correct in the sense that the Federal Reserve Act prohibits that, but he's incorrect in the fact that they sort of circumvented that, the Federal Reserve Act.
Interesting. I didn't know any of that.
But they can't give money out. How do we have money? And the answer is they loan money out. They loan money out. Central banks...
He's also, by the way, like gold... There's been money way longer than there's been a central bank. And so his entire discussion up until this point just presupposes the existence of the central bank and that it is the god of money, basically, right? Like until we had the central bank, then we never had money. It's like there's been money everywhere there's ever been trade. It's just the most tradable asset in any trade network.
Yeah.
So his whole framework is just has bad presuppositions.
Only ever make loans. So they create money. They make loans to commercial banks, Lloyd's Bank, NatWest, other banks are available. And then those banks themselves make loans. So the money gets loaned out. But what that means is quite interesting, which means that all money originates as a loan.
What is gold? Does gold originate as a loan, Gary?
Good old Gary.
No, you won't talk about gold, will you, Gary? Because it blows apart everything you're saying.
Now, since if you borrow money, you also have a debt with it. That means that whenever there is money, there is also debt. That means that if I add up the total amount of money and the total amount of debt in the economy, it will always add up to zero.
Wrong. Well, we've already explained this, basically. But no, the total, again, gold is an asset. It's a monetary asset. That's 100% equity in the hands of its possessor. There's no associated liability. If you had an economy where everyone just held their own gold, you could have an economy with money and no liabilities.
Right.
He's saying all money equals all liabilities, which means he's thinking within the paradigm of the central bank. Because the central bank counterfeits currency or loans currency, to use a nicer term, into existence. So his depth of thinking is not deep enough. Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.